Good morning, everyone. This is Anne Marie, and this is a look at SPY today. Start on the 4-hour chart. We're going to see that we have a clear line of sellers that are pressing us down right around this 152.87, and we have a pretty interested group of buyers here at 151.24. Now, we did dip down below into this support level 2. And popped right back up. But again, as I mentioned over here, what we're looking at is an expanded version of this formation up here. What is that? That'd be noise. That'd be uncertainty. It'd be sideways action. It is not a definitive directional indicator of where it is that we're going, right? We do have some higher lows, but we also have some lower highs. So when you are sitting in a space where the market is disrupted in terms of general direction, you've got to get yourself to a space where you are sitting and having a look at things legitimately, saying, what's my edge to play in this market, in this particular chart? Now, there are certain charts that are doing tremendously well, moving in whatever direction that they're moving. But SPY is not one of those tremendously well because it's performing like the broad market is, which is very choppy. Okay, now we've got an extension here that is going to be key for us to pay attention to. And that would be, if I were to measure what I think is the wave that we need to keep our eye on in terms of how much we retrace, I believe it is this wave right here. That's the one we're ultimately retracing. It could be this wave, but we see we've got, a 78 to 88% retracement event. And now we've got this wave that gave us a 100% retracement. So we're going to go back up to the big wave and have a look. Here's the thing. The VWAPs have started sloping upwards again. So we do have some upside press from that perspective. We've closed above the pivot. And so we'll be looking at R1 and a retest of this area to find out if the sellers have disappeared, if they've moved themselves up into another region. If we fail and drop down in between the VWAPs, we are still in a noisy zone. How do you want to trade this noise? Well, let's go all the way down to the hourly chart. I know some of us trade 5-minute, 15-minute, so on and so forth. In my mind, if you'd like to have a formation that gives you a good feel as to relative movement, it's important to frame your trades on either an hourly or a 30-minute formation. It just seems easier. So when we look at the hourly formation, we can tell that we've got a giant band of really tight congestion that is sitting. Let's see if we can get our little box. It's sitting right here, right? This I would consider the no-fly zone. All right? Now you can see some wicks coming down into there. So if you don't want to get in trouble completely, then I would stay to the bottom of this wick. But here, very, very noisy. If you break out of here, and here's a wick too. Noise. All right, if you break out above here, you're going to have a quick run from 152.49 to 152.87. Listen, for those of you who say the video's not clear, you are watching it at the incorrect resolution. This recording, like all the recordings, are in high resolution 1080i, and you can see that on YouTube if you use the wheel down to the right. That being said, we know that the pop out of R1 takes us all the way into this region. If it holds this region, guess where? It's got to go up here, All right, it's got some support here with the VWAPs sitting well beneath it, monthly VWAP above it. So we're really waiting for the weekly VWAP to take over again to give us the upside momentum that we are really generally hoping for and expecting. Here's the trade. If you want to look at this very tightly, the loss of 151.86 is going to bring you down into 151.60. The loss of 151.60 is going to bring you to the bottom of this box. The loss of 151.37 should bring you all the way. Actually, it may stop you at this VWAP at 151.15. On the upside, you want to get super aggressive. You take it off of, well, if it's had all that noise, you could probably take it off of 152.28, write it into 152.49 if it holds it, 152.87 if it holds that, 153.15. If it holds that is what most traders have a problem with, and the simplicity of trading is if your candlesticks continue to make higher highs and higher lows, you know it's probably going to hit your upside target. And if it makes lower lows and lower highs, you know it's probably going to get to your downside target. If it makes higher highs and lower lows, or lower highs and higher lows, you are not in a formation that has got a high probability trading event attached to it. That's all there is to it. Can you still trade it? Yes. Can you still make money doing it? Yes. Is it high probability? No. So, depending on your skill level, you're going to choose whether you want to stick with high probability trades or try your hand at other things. That's totally up to you. All right. Take care. Have a great trading day.